So I just pulled up Toronto Real Estate Board, and their sales were up 50% year over year in January. Now we talk about predictions for the year, and it's like, well, I think Toronto's going to drive it again. I think Toronto's going to go nuts.
You think that we're done with this? Toronto being the lower growth market, it's going to return to what it was pre 2020.
All right, everyone, welcome back to the Mark Loeffler Experience. We got another great show here for you today. We got Andrew Hines on. We're talking all Canadian real estate. We're going to talk about debt levels of Canadians. We're going to be talking about what's driving this market today, where we see it going. If you guys like these types of videos, smash that like button for the YouTube algorithm. It really does help. Basically, when you smash that like button, it tells YouTube to promote it to more people, and it helps the channel grow. So I certainly do appreciate that. And let's get into it. Thank you, Andrew. Welcome again from Florida.
Thanks again for joining us, Andrew. Always a pleasure to have you. I know you're in sunny and bright Florida right now, so I appreciate you taking the time to meet with us. Obviously, you can see a little bit in the background. We got a lot of snow.
Yeah, it's quite a different story down here. We got 30-degree weather and Celsius, that is. So it's been wonderful. But nice change of pace.
For sure. I mean, at least I can go get a haircut on Tuesday, and I can go eat at my restaurants on Tuesday. So
that's pretty awesome. Well, I'm happy to hear that things are opening back up.
All right, well, let's dive into it, guys. This is going to be all about the stats for the month, and we're going to talk about our opinion of these markets and what's going on. And we'll see basically where this goes. So let me just share the screen here. But like I can just float over here real quick and say, okay, like you look at Northwest Territories, it's up a couple percent. Yukon, same thing, 3%-ish. BC's up around, what's that? Looks like about 12% year over year. Like obviously the province, like the oil producing provinces have been hit a little harder. They're still up, again, around that 3.5% mark. Saskatchewan, not so good, around 2%. Manitoba, what's that, about 5-ish%. Then we got, obviously, Ontario's stupid.
Very stupid.
Like that looks like that's about a 20% gain right there, right? 125. Yeah, that's right. That's a 20% gain.
Well, our national change year over year for December was 17%, right? So I know we haven't pulled that one up yet, but
we'll do it right now.
Let's just think about the precedent for that. Is there a precedent for a 1 year 17% increase in property values that you can think of, Mark? Would there have ever been a time where we would have seen that?
I can't fathom it, to be honest with you. Like
it doesn't make sense, right? Because you think about the average Canadian, like how is the average Canadian? I mean, sure, we have lower interest rates for now, but we only have 5-year mortgage terms for most, right? Like very few people take a 10-year mortgage. Down in the States, people get 30-year mortgages. So if something's to happen, recession comes, or if interest rates rise, they're kind of shielded from that. Canadians aren't. So I mean, I think it would be a really cool conversation to have to, kind of dissect this a little bit and think about how it affects Canadians long term and, if this is sustainable.
Yeah, for sure. And then obviously Quebec was up a whole heck of a lot, 18.8%. So we can see what's driving this, right? Like we can see the provinces that are obviously driving it. It's coming out of Quebec and Ontario and probably out east as well. Let's see, New Brunswick, 11.6. So you bring down the national average, New Brunswick.
But that's very unconventional for New Brunswick, right? They have not been a growth market like this. Like in the past, they've been 1 or 2%, and now we're seeing them see some significant change in property values. And I think that's largely driven by how affordable they are out there.
Well, I mean, look at Nova Scotia, 22.3%, leading the way.
Yeah, Halifax has been very, very hot, low inventory, high sales, pushing their prices way up.
Prince Edward Island, same thing, 22.5%. So, I mean, people are looking to move out. Like, look. I mean, we just look at the Bancroft area. I mean, if anybody's been to Bancroft, it's not that pretty. I mean, it's beautiful. Like, it's like the landscape and everything is beautiful. But I mean, they're up 27% year over year. So, like this is really indicative of what's happening out there. and where people are moving to. They're moving out of Toronto, right? Like Durham region's up 22%.
Yeah, I think it makes a lot of sense to see a migration to more affordable areas, especially we've talked about this, how in the core of the cities, like when you don't have the benefit of your amenities, you can't go out to eat, you can't do these things. Naturally, people wanted to move out. They wanted to go to places where they maybe had a little bit more space or a little bit more house for the dollar. I've seen that in a lot of smaller markets in Ontario is that these prices have just they're going up astronomically in these areas, and I know we've both seen that people are kind of migrating away from the bigger cities. I think we're going to continue to see that. I think we're going to see a lot of these smaller markets continue to see their prices pushed up simply because they're the most affordable option. You've got so many employers that are going to they're letting their employees work from home or work remotely to a certain degree. Maybe they only have to come into the office a couple of days a week. So I do expect that we're going to kind of see that trend continue. I don't know if you have any thoughts on that. If you expect to see that continue as well, Mark.
I'm just looking at Greater Toronto. So I mean, Ontario in general is up 20%. We can see those outlying areas are up like 29, 30%. It's not the usual tale though, right? Because Toronto is only up 11%. Greater Toronto area, yeah.
Yeah.
Which
But those prices were already high, right? Like that makes total sense. Like why would you want to stay if your employer is saying, which I mean we've seen a lot of that more recently, not everybody is going to be able to continue to work from home, but a good number of people will have more lenient or more lax arrangements there. So it's okay to move a little further away. So why
yeah.
stay in the heart, where in the center of the pond where the rock dropped, where it was most expensive when you could kind of go a little bit further out, where the price increase hasn't been felt as much. I mean, which is like if we look at like markets like Windsor, Sarnia, we're going to see 20% increases in those markets, or near 20% increases in those markets as well.
Well,
Because
I'm
why
just
not?
looking at North the Lakes here. It's up 30%. So you wanted to go Windsor? Let's go Windsor. 35%.
Yeah, so why
So
why not,
anybody
right?
who's
It's so
ever who
affordable.
has invested, well, anyone who invested in Windsor in the last year, you look like a genius.
Yeah, an
But it's not
absolute
affordable
genius.
anymore. $438,000. I mean,
Don't you think like the concept of water goes to the lowest point applies here? Like that's the way I look at it. Like water was naturally going to fill up those low areas. In other words, money is naturally going to fill up those low areas and drive the prices up to a point where to where it makes sense, right? If you were going to buy that house to rebuild it, it would cost something similar, right? I think in the Windsor market there was a lot of housing that was below the cost of replacement, and what's really happened is people have recognized that value and they've bought those properties up, which has driven up prices overall.
yeah.
Just my take. I like to look at it from that macro standpoint.
I mean, so do I, and I mean that's what's happening, obviously, and obviously low interest rates. People say, well, I can afford like more house or more. I mean, what are interest rates right now? I'm hearing people getting like 1.3%.
So there's several things that we could kind of split off here and talk about. I mean, one thing is this idea that we're going to go and make our dollar stretch further. Mark, you and I have even talked about this, about the idea of investing in Florida and what prospects there might be down here, just seeing where we can make our dollar go further. I think that's a natural thing that we're seeing Canadians do. And my goodness, what's going to happen if these interest rates stay this low? Do you predict 2021 being another national average 17% price increase?
Here's the thing, like right now, we're looking at like the people who have like, so not everybody's reported January numbers yet, but like the people who have, like, so the Calgary board has, and their sales are up huge, their inventory is down, so we're starting to see a little bit of a tick up in pricing, right? So like, they're up 2% in Calgary, which, again, is not huge, but like you're starting to see inventory go down in these areas where, it's been, a little bit more depressed. Same thing with
Yeah.
Edmonton. I know that the greater Vancouver area, I mean, they saw 52.1% increase in sales January over January. Like,
Again, wild numbers. So people are just buying up houses. Where are these buyers coming from, Mark? What's your thought?
I mean, well, obviously they're coming from some of the metropolitan areas, but we're going to do a video with Alex Wilson, and we're going to talk about the Toronto condo market because a lot of investors are stepping into that market right
Hmm.
now, and they're really driving up the price again. I mean, not huge, but I think so. Do I think we're going to see 17% year over year again? I mean, I think that would be. I mean, that would be really hard to do on a national level. Like that happened on a national level, right? With
Yeah.
the biggest the biggest market being Toronto actually dragging that down.
Yeah, dragging it down a little bit. Like you said, the condo market is starting to rebound in downtown Toronto. It made sense why people left, but it seems like it's finally hit that price where it's low enough that people are getting back into that game, which that was bound to happen. Yeah, how do we see another year like the one we just had with the kind of price increases we just had? At what point? The question I ask is, at what point will the average Canadian just not be able to afford a home? Right? How much further can that go? It's easy to say that 17% was driven by interest rates, but it's got to be more than that. There's clearly, very clearly in Canada, more people trying to buy than people wanting to sell. Which, I mean, immigration's a factor there. Slow planning and decisions and approvals for new construction could be at play there. Do you see anything else contributing to that might carry
Well,
into the
I
future?
mean, let's be honest. People aren't spending as much on other things, right? They're not spending it on travel. They're not spending it on properties outside the country. They're buying. So up in cottage country, they're buying. They're thinking, well, this is going to last for a couple years, where I'm not going to be able to travel like I used to or whatnot. And like a lot of people who are employed, and they're not going out to restaurants as much. So they're saving a crap ton of money. And then they're like, well, I might as well and put it into like a property that I can go to or use or, rent out at the end of the day. And I mean, I think that has a lot to do with it as well, right? I mean, people rightly or wrongly think there's going to be some inflation coming. And, they think, well, if I own properties, then inflation, that should rise with inflation.
Yeah. So, hey, interesting point, interesting take there. I hadn't thought about it like that, but you're right. That probably is partially a factor here. That unintended consequence. You stop people from spending on travel and buying internationally. All of a sudden, they're buying more locally. Definitely a possibility. I don't think that inflation is a theory anymore of what's going to happen. I mean, I guess you could argue that it is, but I just don't know how we don't see some pretty large inflation in the coming years. And for one, I'm certainly looking for opportunities to buy up more assets that are going to hold their value if it does happen. Right? We don't know anything for sure, but I certainly want to hedge myself against that and buy up as much real estate as I can make sense of, to hold its value.
Well, and same with me. I mean, I'm just baffled by some of these numbers, but like you're seeing it, like I'm looking at Bancroft again, right? It's. I mean, let's be honest. There was 20 sales there in January, right? So I mean, it's up huge from the last year. It's
Yeah.
from 12 to 20, but prices rose 23% year over year in January, right? Like
Mhm.
it's like just well, I won't tell you Alberta just in general. I have to go through each board, and we kind of went through a couple.
Yeah.
Um,
But just on the note of Alberta, didn't we expect to see like a more depressing figure after the Keystone Pipeline was canceled?
a little bit. I mean, again, I think interest rates are kind of pointing at it, and I
Yeah.
kind of like to be that person who is a bit of a contrarian. So that's why I'm kind of looking at Alberta as an investment right now because I like to buy when others are fearful.
Yeah. And that makes a lot of
Uh,
sense.
and it might be why I'm selling here now. I mean, because I can sell when others are greedy.
I still think that Calgary and Alberta, like Alberta in general, represents an extreme level of affordability compared to other Canadian markets, right? With such well established infrastructure, they've got a lot of beautiful landscape out to the west. Um, I think that there's naturally going to be, just people that go there because of the affordability, and maybe that's some of what we're seeing, that people are deciding, hey, there's more opportunity for me if I move out there. Maybe we're going to start to see some new industries really taking over in that market, to help prop it up and to help service the new people that are coming out there.
In real estate boards, like it's the middle of the month. Why can't you have your stats? Like I don't understand. Like we're we're in like a technology age. Like you should have your stats like 2 days after. Like I don't understand
Yeah,
this, but
this will
like
be our
half of you
episode of
do.
This will be our episode of tech difficulties and not enough stats posted yet. But I mean, I think the overriding data and the overriding discussion is still very valid.
Yeah, 100. Well, I mean, so I just pulled up Toronto Real Estate Board, and their sales were up 50% year over year in January. Now, so now we talk about predictions for the year, and it's like, well, I think Toronto's going to drive it again. I think Toronto's going to go nuts.
You think that we're done with this? Toronto being the lower growth market, it's going to return to what it was pre 2020.
Well, I mean, if January is any indication, like you're seeing, like there was what I don't know, almost 7,000 sales. Yeah, 6928. Like, and they never had like the best year was 2017. I think that's the year they introduced
Mhm.
the stress test, right?
Yeah. So then we had the correction
So
after
we had a
that
little,
stress test.
yeah. But so people were buying into that stress test. So what's the thought now? Like, why are they like? I don't know if we're going to see 17%, but I don't think it's going to go down. Like you're looking like again, bench price was up 12%,
Yeah.
so it's ticked up a bit more than the average year over year. But I mean, if it just continues like this, like you don't.
Do you think that there might be more to it than this? Maybe there's more international buyers buying in Canada that are also taking up some of our inventory. I mean, I'm just trying to explain the level of change here. It just, like you
Honestly, I
said, the
think this
stress
is
test.
homegrown.
You think it's, yes? I mean, totally could be. We have had a lot of international buyers over the years because Canada's seen as very safe, as an investment market. But so if it is homegrown, how all of a sudden have people become able to overcome the stress test? Because the stress test, despite interest rates being down, the government posted rate is what the stress test is based on. So it's still going to be just as hard for people to buy, not quite just as hard because the 5 year rate has come down a bit, but if people are taking mortgages, they have the same restrictions they did in 2017, more or less. So what's allowing them to do this, or is this just wealthy people um, who are not really borrowing or not affected as much by that stress test?
I mean, everybody's waking up and basically saying, "Okay, I have my job still." And they have equity in their home now, and
Mhm.
they must be using that equity. I mean, let's go look at the debt ratio. Obviously, this was in December 2020. Household debt rises to 170%, 171%. Stats Canada says, right?
So
So I
so
mean,
maybe it is people just getting more comfortable borrowing more. Maybe people are more comfortable now leveraging up more than they were a few years ago, and this is helping drive, along with the interest rates, helping drive this massive spike in demand for property.
disposable incomes fell 3.1%. I mean, and that, obviously is going to be a trend because we're seeing the lower end. Like we lost 200,000 jobs or whatever in January because everyone shut down. And it's a lower end with the people who have the most disposable income. Like if you're working you're 19 working at a restaurant or whatever, or fast food, and you live with your parents, like other than taxes, you're 100% disposable income, right? So everybody who's employed, they seem to have more disposable income, and they're definitely, obviously, drawing into that increase in home equity to be purchasing.
Yeah, well, I mean, it's never been cheaper to go take out a line of credit on your house and then use that money to buy a second property. I think, to your point earlier, Mark, a lot of people see this as an opportunity. Maybe it's time we get a second home in case we get locked down again. Get something out near the lake, get something where we have a little bit more space. So that could be a factor here as well. And if that is happening, then I don't really see that stopping over the next year. I would see that trend continuing.
100%. Well, I mean, I just pulled this up here. Canadian auto sales fell 20% in
Mhm.
2020, right? So again, people aren't spending it on cars. They're not spending it on vacations. Like they're spending all their money on homes,
Money's got to go somewhere.
investment
But
properties or secondary
yeah,
properties, whatnot, right? So
but GDP was down. So just to kind of bring that in, where early estimates were GDP down about 5% over year. So that means that some people have net saved, right? Because a lot of people weren't really losing their jobs. The government did give out and spend $500 billion they didn't have. So knowing that, there are a lot of people who have saved, and then, like you've said, there's a lot of people that are putting money into to other things since they maybe they're feeling really comfortable. And I think that's a big reason why we're not in recession, why we haven't seen a recession. Well, sorry, I shouldn't say we're not in recession, but we're not seeing a typical recession in that in a normal recession, people contract in spending. They don't want to spend. We haven't really seen that, but no one's really lost their pensions yet. The people who have been hurt by this are the small business owners, they're the service workers for the most part, but then they're also getting the government handouts with CERB and unemployment. So it's this very strange downturn that we've seen. Not to get tangent here, but I think that these are all combining effects that are showing or are contributing to why we've seen such a growth in this real estate market.
I mean, it just, yeah, I mean, it boggles my mind, but yeah, I'm going to go to where the water flows the lowest. And I mean, Alberta, Saskatchewan looks pretty good to me right now.
Mhm.
I mean, even like everyone talking about the Montreal hot market, but I mean, it was only up 18% last year, right? Like
Mhm.
it's right sitting right at average. So
I think people make a big deal of that because it's so uncommon for those markets, right? The same thing with New Brunswick. We look at that and we say, well, it's only 10% compared to 17 everywhere else, but they've just never seen much growth at all.
yeah,
I
they've been
know,
2%, right? Like
yeah,
every year or whatever,
1%. I know a
1%.
guy who bought a massive portfolio in St. John, and he told me, I don't get appreciation. He's like, it's only cash flow. It's all about cash flow, mortgage pay down. Well, that just changed, and so it's very significant, even if it doesn't look significant in some of these markets.
This was obviously a different real estate update. We talked about a lot of different things, obviously GDP, debt, what's fueling this market right now. And I mean, obviously, early signs for 2021, like this is going to be another hot market. Like unless the government steps in and does something, which they don't seem to be wanting to do, right? Like doesn't seem like this is something they're going to step in. I think they want this because it's fueling. It's. I mean, obviously, it fuels a lot of different things. When somebody buys a house, you know, they do a lot of work to it. They spend a lot of money on it, and you know, that creates GDP and jobs, right? So.
Well, same with the transactions too, right? So if we shrink our home sales, then it's going to make our GDP for the year look much worse, right? So for optics, I think that this is very good for the government. It makes it look better than it is in Canada in terms of our GDP.
So what you're saying is that the government is complicit in creating a bubble here.
I think that they don't mind. I mean, I'm never one to shy away from being controversial, but I think that they don't mind. I think that the optics of it look good to see a strong market. Now, of course, like you said, if it gets too far and it turns into a bubble, like we always question that. Is it a bubble? You know, what happens when the bubble bursts? Is it just a stagnation, or is it a massive correction? Who can really say, right? There's so many factors at play for that to happen, right? So it's tough to say that they're complicit in creating a bubble. Of course, we could speculate and have an opinion on it.
Good. All right. Well, you know what? I'm just going to leave it right there then.
Yeah, Mark, this was fun. I mean, very, very different, right? But it's very obvious the market's growing, right? So this was a cool talk. I like that we kind of switched it up a bit.
Yeah, me too. All right, sir. Well, enjoy Florida. Have fun working on your golf game, and we'll see everyone in the next one.